Hello investors, my name is Jerry Frank and I'm CEO of Asset Rover, and today I'm here with Liz Nichols, who we first met through the Iowa City Real Estate Meetup group, and she has led this group now for over 5 years and it's grown to over 180 members. It's doing quite well. Liz has been leading this and has been a real estate investor herself for the last 12 years with her husband. And she has most recently joined a group called ARI Advantage Capital, LLC, where she is a managing partner, where she sources private money to investors. And today we're going to talk about now hard money lending. Hi Liz, welcome.
Well, thank you for having me.
Yeah, we're glad to have you here today.
Yes.
What is hard money lending?
Well, that is money that is more expensive than a loan from a bank, for sure, but it has a specialized purpose. It has a purpose in life. First of all, there are often investors who can't get a bank loan. They may not be able to get a bank loan because the property is in too bad shape to get a loan, or because they want to do a loan to buy 3 or 4 or 5 properties at a time, and the bank just won't buy that. Maybe they've already got 10 or 15 properties and the bank has said, nope, your debt to income ratio is now out of whack and I can't approve any more. So sometimes people, even if they have really good credit, will go to a hard money lender, and which basically would be money that would come at a high percentage of rate. It would be usually an interest-only loan for anywhere from 3 months to 24 months at between 10% and upwards of 18% sometimes, depending on the property and the level of risk that is assessed in terms of the investor. But there are many people who don't have 700 credit scores, can't get a bank loan, or, as I said, the property is not such that a bank is going to lend on it because it needs too much repair. Hard money lenders are really zero in on that market. They're looking at investors who have good deals. They maybe are getting it at 65 or 70% of after repair value or better, and they can't get a bank loan. They are going to maybe flip the property inside of, say, 6 months. A hard money lender is just ideal for that kind of investor who is just needs short-term cash, but can't afford to bring all the money to the table to get a deal done.
So they're really kind of a niche lender.
Yes, but it's a large niche, and we're finding there are even getting to be maybe not hard money, but something in between a bank and hard money is something called soft money. You can get longer term loans even if you don't have perfect credit, and even some will do it for a resident, for somebody's residence, in say a 6.5 to a 9.9% interest rate. So if you're willing to put up with that kind of interest rate over a long period of time, or you simply don't have a choice because your credit and or the property do not lend itself to a bank loan, you can get an extended loan, with something called soft money. So those are the 2 areas that I'm dealing with. I happen to be dealing specifically with investors, that is, people that are buying non-owner occupied property, and they're using it usually using it for a short period of time. It used to be that really it was there was not a non-bank market for people who wanted to be landlords. Now there is. If you've got a good enough deal so that you can get it to cash flow and you don't have totally in the tank credit, usually those lenders will require you to have a 640 credit or better. But that's a lot of people who are out there buying property that have credit scores in that 640 to 690 range and can't go to a bank to get the money to save their life.
Right. That's great. There's those options.
Yeah, there are those options now. You just have to make sure you get a good deal, because those hard money lenders are looking much more at the asset and much less at the individual, and they still want to make sure you have some skin in the game, which means that maybe you're putting anywhere from 20 to 35% in, but they're willing to look at creative ways for you to get that 20 to 35%. You might be able to take a property you already have free and clear and do what is called cross-collateralizing. And so that you end up with another mortgage on that piece of property, but only until you've paid off the loan for, maybe the fix and flip you're working on. That way you can come, that's a no money down strategy. You can often come with no money out of pocket, even with a hard money loan. If you've got another property, and then you can use that same property repeatedly, to cross-collateralize your fix and flip deals. So that is a way an investor might, it's advantageous to have some rental property that you have free and clear. And then if you want to do some fix and flip work, you can often do it with no money out of pocket because you've got another property that you're using as collateral.
Right.
Or you can find, if you don't have that, you can find a partner who has the money. You can borrow it. Usually banks frown on that, but if your great aunt is willing to give you the down payment money, it can get into your bank account that very same month that you close, and the hard money lender isn't going to care,
Right.
as long as the money is there. So they'll accept many more creative ways for you to get the deal done than a bank typically would.
Very interesting. Why don't you walk us through a step-by-step process when someone's going to use a hard money lender?
Okay, I know we talked earlier about what normally happens, and you've got a bank loan. Maybe you've gone through a realtor and you've got a property you want to use as a rental. Usually the realtor is going to say you need a pre-approval letter. Well, I can get pre-approval letters too, but it's doesn't have quite the same meaning as going to the bank and having them check, yes, indeed, you've got X amount in your bank account, and yes, and your credit score is something we can lend on. So yes, this person is pre-approved up to X amount of money. Instead of pre-approval from a hard money lender is really going to mean that hard money lender has X millions of dollars to loan, and provided the deal pans out the way it's been presented preliminarily to them, they'll be able to lend to you. So it's contingent on finalizing the process, but you can get a pre-approval. What you really need to start with then with a hard money lender is a contract in hand. And I often help people educate them before they've actually signed the contract to make sure it's a good enough deal. I'll look up, this is just one of the value-added services of having a broker, incidentally. They'll kind of help you through the deal. So I'll look up on various sites that mortgage lenders look at to determine valuation, and they're very often very accurate. So I can tell even before someone signed a contract whether it's a deal that's going to fly with a hard money lender, and if not, how much out of pocket they're likely to have to spend. So before they've actually put the money down, I can usually tell them whether the deal is going to fly or not. But then we'll start actually vetting different hard money lenders once they have a contract. If you can give me as a broker, or really any hard money lender, 14 to 21 days before you need to close. We can usually find 2 or 3 lenders that would be interested in doing the deal, and will, you'll have a pretty good idea right up front of what you're going to have to come to the table with for the deal. So then, once you've got the contract and we found some lenders, you'll expect most of them will require an appraisal. There's really no way of getting around it. There are very few lenders that will just allow you to hand over a broker price opinion and get a property that way. In that respect, hard money lenders are similar to banks. You have to build in enough time in most cases for that appraisal. But that is usually the only money out of pocket that you will spend before you get to the closing table. So about $450 for, say, a typical single family dwelling appraisal. And it'll be a third-party appraisal that'll be selected through a service that the lender has.
Okay.
Again, very much like with a bank. Then we'll go through and do an application. Usually the application is not very tough to do, and I can help an individual through that process. They'll usually either ask for bank statements or they will ask for a tax permission to pull a tax transcript. Again, in that way, similar to a bank. But they're not going to be looking at things like debt to income ratios or how many dings you have on your credit report. They're usually using the scores, the credit report, that they will also be pulling to determine the interest rate. And the better your credit score, the lower risk that they'll see you as. So, you might be able to get hard money at 10 to 12% if you have 700 or above credit. And more typically for people who have lower credit scores, you'll be in the 13 to 15% range for, say, a typical fix and flip type loan.
Okay.
The lender then has an underwriter who will vet the whole process. They'll take the application and the documentation. The underwriter will coordinate it with your closing attorney or closing title company.
Okay.
And then it'll be very much like any other process of buying property, where you go to the closing table after you've looked through a HUD-1 closing statement, and
Right.
Everybody has to sign off that those numbers are accurate. That's really pretty much the process. It's a simplified version of what you go through with a bank, where they're much more interested in making sure that you've got a good deal and a good property than they are in you, particularly as an investor.
And so for that whole process from beginning to end, are we looking at a 30-day time frame?
Yeah, you can get through it usually in less than 30 days. But most brokers will feel most comfortable if you can at least give them 21 days.
Okay.
And I have I do work with a few local investors who are private lenders, and for particularly well-qualified investors, people who have done a lot of deals, know exactly what they're doing. I have actually been able to get loans closed in less than 7 days.
Wow.
with the private lenders, with very little paperwork, and with a broker price opinion instead of an appraisal.
Wow.
So it is possible, but I'm generally not going to be recommending someone who is a brand new investor.